29 years old and my investment account is just short of $200,000. In today's video, I'm going to break down my investments account by account, and it's not very complicated. It's actually mostly split between 3 separate accounts. We're going to break those down, see how much money is in there. We're also going to talk about where that money is invested into, and maybe how much I'm investing a month, how much I'm investing a year, and kind of the habits and the things that I've done to get to this point, because $200,000 is a lot of money, and by the age of 29, I think that's pretty good. Maybe we could also see where that stacks up with your average 29-year-old. So without further ado, let's get into the video. I'll also be adding screenshots so you can see the balance of the accounts. So you can actually see the number, and hopefully it will motivate you to start investing, because once you start investing, it becomes addictive, especially when you start to see these accounts grow. You're going to absolutely fall in love with the process, hopefully. My largest account, and I did a video a few months ago, like last year, I don't think it was even a year ago, where this account was at $70,000. Now this account is at $110,000, and that is my 401k. This is my main account where all of my money is gonna go, because that's just something I believe in. I love getting the match, and then I add on to the match. Say I do 15%, the match is gonna give me 5. That's 20% being invested into my retirement, and all I had to do was contribute 15% of that. My 401k is invested into a fund that closely matches the S&P 500. We also have an international fund, but the main fund that my 401k is invested into is a fund that closely matches the S&P 500 or the entire stock market. So if the stock market is good, then my 401k is going up. If it's doing bad, then my 401k is most likely going down. But over time, the stock market is going to go up. I say that it's there so we can make money, so it's going to go to the right and up over time. Now, as you see, this return is at 13%. That's like way better than what the average return is for the S&P 500, which is between 7 to 10%. 13%, right? Now I'm going to pull out my investment calculator. Yes, I have an investment calculator, and the link is in the description. You can put the investment calculator on your home screen, and it's not an app, it's a website, but if you put the investment calculator on your home screen, it will actually show up like an app. And I'm using the iPhone. Look how clean that is. Like, it's literally a website, but when it's on my phone as an app, like, that's so good. So say right now I'm doing $110,000. So I have $110,000 in there. We'll just say 111, get that number close. Let me do 11000. And again, you can get this investment calculator in the description below. Let me know what you think about it. And how much would I contribute monthly? I'm doing 15%. All right, we're gonna say it's about $1,900 because we're getting that match. $1,900. We'll say $1,800. Say we're doing that every single month, and let's say we actually keep going at that 13% for 20 more years. That's how much time I have left to work. 20 more years, then I'm done. I'm retiring. I'm not working nothing else. That would be $3.5 million, as you can see right here on the calculator. If we put that at 7%, so we can factor in inflation and factor in those numbers, I honestly like the 8% number. That's $1.6 million in the actual value of that dollar in 20 years. That's at $1,800. If we put it at $1,400 invested a month, that's about $1.4 million. At that 13%, that's $3 million. So it's kind of crazy that this return is so high, but we know average return on the market between 7 and 10%. So this is kind of an anomaly, and we know that the market is up and down, it's up and down. This is my main account, where a majority of my money is, where a majority of my net worth is, where I'll be pulling the majority of my money when I retire. I'm happy about this account, happy about the growth in it, and all I gotta do is just continue to contribute and stay consistent with my contributions. All right, next is this is honestly extra money. This was money that was in a savings account, and I'm just like, let me just throw it to my brokerage account. And we have a Roth IRA in here, and we also have our son's 529, which is still under our name, but he's the beneficiary of it. So we're still gonna add that to our investment portfolio. But this account in my Fidelity, $45,000. And this account has been going up and down, and I mean, it literally looks like a roller coaster. When you look at the table chart, it looks like a roller coaster because the market has absolutely been crazy. Like, one day we'll have great returns, the next day we'll lose those returns, and then the next day we get a little bit more than what we lost, and then it's just down again. So this account has the brokerage account, which I think I'm going to turn this into more of a savings account for our next house, or for whatever I want to use it for, or maybe an emergency fund, because at the end of the day, I don't think I really need a brokerage account in retirement to get access to that money at 49. I'm not contributing any dollars to my brokerage account anymore. And I have my Roth IRA. Now with my Roth IRA, I'm contributing $3,000 a year, which comes out to about $250 a month, consistently contributing to my Roth IRA. I'm not crazy about the Roth IRA. Like, it's not my main account like my 401k. My 401k, that's the bread and butter. Traditional 401k, not even a Roth 401k, straight up traditional. We started this Roth IRA, but I think it was about 3 years ago. Roth IRA is at $19,000. So brokerage account's at 17, Roth IRA is at 19, and our son's 529 account is at $8,000. I'm super excited about that. He's about to be 2, and his account is already at $8,000. So I kind of want to show you what that could look like over time, because I think that the 529 is probably one of the best accounts that you can have, especially if you value education, just like me and my wife value education. Like, we both went to college, so we want him to go to college. And if he doesn't go to college, then we can take that money out. It's gonna be taxed and it's gonna be penalized. At least that money can go towards him and whatever he wants to do. And if he gets scholarship, then I believe that a good bit of that money can actually be taken out penalty free. So up to $35,000 to 529 can actually be converted into a Roth IRA. Let's say you have $35,000. And that's not even going to be the full account. Like, this account's going to be probably double or almost triple this size by the time it's done growing when he's 18. So say we do nothing. Say we just transfer that $35,000 for him as a Roth IRA. He'll be 18, 28, 38, 48, 58, 40 years. Give it 40 years to grow. That's crazy. We'll just say 8%. Factor in inflation. Over 40 years, if he did nothing, he would have $849,000 in his account. Guys, I'm telling you, go download this calculator. It's completely free. It's not even a download, it's a link, and then add it to your home screen. If this was at a 10% return, $2 million. If this was at a 12, $4.6 million just by investing $35,000 and not touching it until he's 59 and a half. Maybe those rules change by then too. He might be able to actually access his Roth earlier. Who knows? 40 years is a long time from now. The account has $8,000 in it. We do about $2,000 a year, and this money is actually coming from our tax return, so we get money back from our taxes, especially with our child credit that we get. We're gonna put $2,000 or whatever the child credit is into his account because we don't need that. It's for him. So we're gonna divide that by 12. That's $166. So basically $166 a month for 18 years. So year to date, this return is at a 10%. They just continue to grow at 10. I mean, that's not likely, but maybe it will. So that's $147,000 into his 529 account for his college, for his trade school, whatever he wants to do with that. $147,000 just by investing our tax return or investing part of that tax return. Putting that money aside for our child feels great, knowing that he possibly won't have to pay for schooling like we did. He won't be at a disadvantage once he starts life. So far we're at $155,000. That is how much we have invested. Now we also have an emergency fund. This emergency fund is at about $30,000, 35, 30. That'd be about $185,000. We have about $185,000. Emergency fund is not really invested, but it's in a high yield savings account. Give me a return of about 3% from Ally Bank. Now that link is in the description below. Check it out. It's crazy how much your accounts can grow, especially if you start investing early and start investing consistently. Oh, and also my Fidelity, like majority of the money is invested in the S&P 500, FXAIX, VOO. Keep it simple. I got a little bit of Tesla, got a little bit of Nvidia. 50-60% of the money that's in my brokerage account, that's VOO. Even more, like 60% in my Roth IRA, that's FXAIX. This is just S&P 500. Just like my 401k, it's all invested to the S&P 500 or funds that match that. You really can't beat it. I'm not out here picking stocks. I'm just consistently investing every single month, the same amount of money. Maybe next year I go raise that amount by $50. That's where my money's invested into. And for my sons, it's also invested into something that matches the S&P 500. Like, you can't go wrong by investing into a fund that matches the S&P 500. Super simple to grow your wealth. You don't have to make it overcomplicated. It's gonna take time. You're gonna start seeing your money start to grow as soon as you get more money in that account, because the compound interest is gonna just keep pulling. So now I kind of want to transition to exactly what I did to get to this point, because it was a lot of work. I don't feel like it was very hard work, because these financial habits are just in me. They're in my DNA, and this is just what I do. I can't help but live below my means. If I make 100K, 200K, 300K, I can't help but to go and look for a house or go and look for an apartment that I can more than comfortably afford. I'm not the person that's gonna go get a loan for a house and try to get the most money that I can get out of that house. Say they give me a loan for $500,000. I'm the kind of person that I'm gonna go look for that $400,000 or $300,000 house. Still nice, still have a good quality of life, but there's things that I value outside of living in a home or outside of living in an apartment. Like, I like to travel. I like to go out to eat. I want to make sure I have more than enough money to actually do those things. I also invest it every paycheck. I mean, it's super easy when you're investing your 401k because this is money that is taken out pre-tax. So it's automatically invested into your 401k every single paycheck, and there's really no stopping the engine. The only thing that you can do is really just contribute less. Actually go in there and physically input that you want to contribute less, but I'm not doing that. I also increased my contributions as I made more money. As my expenses got lower, I increased those contributions. So if I got a cheaper phone bill from T-Mobile to Mint Mobile, maybe I save $100 a month. Now I can put that $100 a month to my 401k. I also avoided debts. I mean, we just got a brand new car, and that's a debt. We put it on 3-year loan term, 20% or more down, and no more than 80% of our take-home pay. But I avoided that early debt when I was 24, 25, 26. I didn't just go out there buying a vehicle. And also, one of the biggest things that I did was I lowered my housing expense. I got a house hack, which I'm in right now. We rent out the top, live in the bottom, living for free. So now, instead of paying money towards mortgage, instead of paying money towards rent, even if we did pay the mortgage, it would still be a lot less than what people are paying for these $1,500 to $2,000 apartments, which we could actually be paying for if we actually end up moving to Boston. House hack has really helped with this investing and literally just like staying down for the first, we've been here for going on 5 years. 5 years. I would contribute the house hack to one of the biggest reasons, if not the main reason, to why our accounts have grown to where they are. So now, how do my numbers stack up to your average 30-year-old, average 25, 35-year-old? Now, according to CNBC, which I'm pulling this article up on my phone, 25 to 34-year-old, the average 401k balance is at about $42,000. Median is about $16,000. I'm way above that. 80% of people participating in that. It should be 100%. Everyone should participate into your 401k, at least get the match. Those were some of the things that I did to kind of get to that point. Delayed gratification, lowering my expenses, living in a house hack, not immediately getting into more debt when I graduate because I already got student loans. So I'm getting into car debt or getting personal loans or anything like that, staying out of debt as best as I can. And then from 35 to 44, the average balance is $103,000, and the median is always lower, and that's $39,000. As you can see, I'm still above that $103,000, just barely at that 110 for my 401k. Once you add in those investments and everything else, well above it. So more than likely, well above your average 30-year-old in investments, but we're not comparing ourselves to others. It's just kind of to see where I measure up compared to someone else down the street or someone at another job or someone in another state. So what's next for me? My goal is to just continue to invest my money, continue to dollar cost average some market, because that's what I do. I'm a long-term investor, I'm a hold kind of guy. Just continue to do that. Maybe increase my contributions, and over time, my accounts are going to continue to go up. It's going to go to 200, 300, 400, 500. It's really not a goal that I have to set because at the end of the day, like I said before, the stock market is meant to make money. It's meant to go up. So I really don't have a goal. And you can kind of estimate on the investment calculator how much is going to be in your account by a certain amount of time if you continually contribute and you get that annual return, or you get a range of annual returns that you're looking at between that 7 to 10%. You can kind of estimate how much you're going to have in your account. Like it's not just a magical thing that's going to happen. There's no need for me to set a goal that's going to happen. As long as I continue to work, do my thing at work, come home, invest my money, stay healthy, continue to work out, continue to practice healthy habits, then I should get to that 1 million spot, maybe 10 years, 15 years, but we're not counting. We're just going to continue to invest for our family, continue to invest for ourselves, and see where our account grows to. Let me know how much you have invested into your accounts, and if you have any advice on how we can invest more money or some things that we can do, or if you have any questions, my email's in the description if you want to kind of talk about investments and talk about investing in your 401k and some things that you can do in your life so that you can invest more money. Let me know in the comment section or email me, and I will love to have some kind of finance talk because I love talking about finances. So hopefully you guys enjoyed the video. If you did, leave a like, subscribe to my channel, and I'll see you guys in the next video.